What if I told you there's an investment product that could pay you 6.15% guaranteed for 5 years right now, in 2026? Sounds incredible, almost too good to be true, right? Especially when the average high-yield savings account is hovering around 5%. Last year, annuity sales hit a record $385 billion, and there's a reason for that explosion in popularity. But here's the kicker. Annuities are famously complex, loaded with fees, and often misunderstood. We're talking about products that have left some retirees locked into unfavorable terms, while others swear by the steady income. For instance, in 2022, when interest rates were climbing, many investors missed out on higher returns because their money was tied up. So, what's the real story with annuities in 2026, especially with new legislation like Secure 2.0 impacting retirement planning? We're going to look at the math, the real rates, and uncover if this guaranteed income comes with a hidden cost. Welcome back to the channel. Today we're diving deep into a topic that's been making headlines, especially with interest rates where they are. Annuities. Look, in 2023, annuity sales hit an all-time record of $385.4 billion. That's a 23% jump from 2022, according to LIMRA research. Now, why the sudden surge? Well, with income annuity payments at their highest in a decade as of February 2024, thanks to rising rates, a guaranteed lifelong paycheck sounds incredibly tempting to many people. We're talking about products promising things like 6.15% on a 5-year MYGA from Wichita National Life, as reported in June 2026. The question on everyone's mind is, are these numbers too good to be true? And, more importantly, what's really going on under the hood? We're going to break down exactly how annuities work, and what the real-world implications are for someone looking to secure their retirement income. We'll look at the good, the bad, and the sometimes confusing details so you can understand what these financial products truly offer. You know we'll be showing the math, just like always. Let's start by defining what an annuity actually is, because for many, it's still a bit of a mystery, or worse, a source of major confusion. At its core, an annuity is a contract with an insurance company. You pay them money, either in a lump sum or over time, and in return, they promise to give you regular payments, often for the rest of your life. This is why famous investors like Warren Buffett, through Berkshire Hathaway, own some of the largest annuity providers in the world. It's a powerful financial product for insurance companies, and it can be for you too, if you understand the mechanics. So, why the sudden surge? Well, with income annuity payments at their highest in a decade as of February 2024, thanks to Rob Williams of Charles Schwab, guaranteed lifelong retirement paychecks are looking pretty attractive. This is especially true for those buying single premium immediate annuities, or SPIAs. Kimberly Langford, writing for AARP on March 6, 2024, highlighted that annuities are booming, with sales hitting record highs because they offer a solution for steady retirement income and low-risk investment. It's not just retirees getting in on this, though. Ameriprise Financial recently debunked the myth that annuities are only for those already retired. They clarified that deferred annuities can actually serve as a fantastic tax-deferred retirement savings vehicle for folks still in their working years, offering tax advantages and even portfolio protection. What's really driving these attractive rates? It's the current interest rate environment. When Federal Reserve interest rates and Treasury yields climb, they act as benchmarks that significantly impact annuity payout rates. This makes them far more appealing now than in previous years. Plus, there's even more buzz around these products because of upcoming legislation like the Secure 2.0 Act, which is poised to significantly impact annuities and retirement planning, suggesting continued focus and potentially favorable tax changes. The lesson here is that higher rates and legislative tailwinds are making annuities more attractive than ever before. But let's unpack this guaranteed income promise a bit more. What do those rates really look like? So, why are these guaranteed annuities looking so appealing right now? It comes down to those compelling rates we're seeing. When we're looking at a world where high-yield savings accounts are hitting around 5%, an annuity offering 6.15% feels like a clear winner. For example, as of June 15, 2026, Wichita National Life is offering a 5-year MYGA, that's a multi-year guaranteed annuity, at a robust 6.15%. Even an A-rated insurer like Global Atlantic has a 4-year fixed annuity with LTC at 6%. These fixed annuities offer a significant bump over traditional safe money options. Now, this isn't just about the fixed rates. The broader environment for annuities is incredibly favorable. Rob Williams of Charles Schwab highlighted in February 2024 that income annuity payments are actually at their highest in a decade. That's a huge deal for products like SPIAs, or single premium immediate annuities, which are designed to provide that guaranteed lifelong retirement paycheck. But here's the reality check from immediateannuities.com, updated as recently as November 14, 2025. These rates aren't static. Insurance companies can announce rate changes with as little as a week's notice. While the current rates are attractive, they are dynamic. What this means for someone considering an annuity is that the specific offer you see today might be different next week. Annuities are definitely powerful tools for building a secure retirement, especially with that promise of guaranteed income and protection from market volatility, as Ameriprise Financial points out. But it's also a very personal journey, as the legal and general case studies remind us. Often, getting the best outcome means combining different products, not just relying on one. So, while the guaranteed income promise is a major draw, the lesson here is that you're looking at a snapshot in time, and your personal situation dictates how these guarantees truly benefit you. This leads us right into the flip side. The often mostly deserved bad rap annuities sometimes get. Now, despite these attractive payouts, annuities have historically gotten a pretty bad rap, and honestly, a lot of it is deserved. Marcus Schaefer, Director of Growth, and CEO Pat Collins of Greenspring Advisors, in their piece The Truth About Annuities. Why their bad rap is, mostly, deserved, point out that it's very, very difficult for retail investors to come out ahead on these products. They even highlighted a 2014 Wall Street Journal story about the Rosenthal family in Minnesota. After winning nearly $60 million in the lottery, they purchased annuities that ultimately became a struggle, illustrating the real-world complexities and challenges investors can face. Think about it. During the 2020 COVID crash, when everyone was scrambling for principal protection, the Storin team at Storin Financial documented a case on October 9, 2024, where a fixed annuity negatively impacted a client's retirement plan, despite their initial goal of safety. It's a stark reminder that even seemingly secure options can have adverse outcomes depending on market conditions and the specifics of the product. The Financial Planning Association, in their article on real-world index annuity returns, implies a similar concern, highlighting the need for transparency around actual historical performance, especially with complex index annuity structures. It's not always clear how those index strategies actually translate into returns for the consumer. And honestly, the fact that some of the articles I tried to pull up for this very video, detailing the dark side of annuities, gave me access denied messages? That, in itself, speaks volumes about the lack of transparent information sometimes available to individuals looking into these products. But it's not all doom and gloom, and some of those negative perceptions are actually common myths that need busting. Thanks to Rob Williams of Charles Schwab, guaranteed lifelong retirement paychecks are looking pretty attractive, especially with single premium immediate annuities, SPIAs. Kimberly Langford, writing for AARP on March 6, 2024, highlighted that annuities are appealing due to compelling rates. When high-yield savings accounts offer around 5%, an annuity guaranteeing 6.15% feels like a clear winner. For example, as of June 15, 2026, Wichita National Life is offering a 5-year multi-year guaranteed annuity, MYGA, at a competitive rate. Despite these payouts, annuities historically have a bad rap, often deserved. Marcus Schaefer and Pat Collins of Greenspring Advisors note it's very, very difficult for retail investors to come out ahead. However, the narrative often misses key nuances. Many believe annuities are only for retirees, but that's a myth. Ameriprise Financial, in their November 20, 2024 article, clarifies that deferred annuities can serve as a tax-deferred retirement savings vehicle for individuals in their working years. For instance, someone in their 40s could buy a deferred annuity, let it grow tax-deferred for 20 years, then convert it to income. Annuities offer more than just guaranteed income. Ameriprise Financial identifies portfolio protection from market volatility, crucial during events like the 2022 S&P 500's 19% drop, and estate planning advantages. So, it's not solely about the paycheck, it's about managing risk and legacy. Kimberly Langford's AARP article on booming sales suggests wider demographic interest beyond just retirees, as people seek low-risk investment options. Even legislation like the Secure 2.0 Act implies a broader role for annuities in long-term savings. Consider Sarah, a professional not near retirement, who might use an annuity to safeguard wealth against market downturns, rather than just waiting for her golden years. This underscores that individuals are considering these products for wealth preservation and growth at different life stages. Navigating annuity choices. What's right for you? So, when we're trying to figure out if an annuity is right for a specific situation, it really does come down to a personalized approach. The Legal and General article really nails this, emphasizing that retirement planning is a very personal journey, often needing a mix of products for the best outcome. It's not a one-size-fits-all product. Take Chris, for example. The Legal and General article highlighted how he used inherited pension funds to purchase a fixed-term retirement plan. This wasn't just standard retirement savings, it was a tailored solution for a unique financial situation. The goal here isn't to just throw money into a general annuity. It's about matching the product to the objective. Rob Williams from Charles Schwab, on February 15, 2024, specifically pointed to single premium immediate annuities, or SPIAs, as an attractive option for people looking to convert savings into immediate payments. That's for a very specific need. Then there's risk tolerance. The Storin team, on October 9, 2024, shared a case study where a client, rattled by the market volatility of 2020, actively sought a principal-protected account. An annuity, in that scenario, could offer the stability they craved. But even within annuities, rates vary. As of June 15, 2026, you might see Wichita National Life offering 6.15% on a 5-year MYGA, while Global Atlantic offers 6%. The lesson here is that comparison and due diligence are crucial, considering both the rates and the insurer's financial strength. It's about aligning a specific annuity to an individual's financial picture, not just chasing the highest number. So, are annuities too good to be true in 2026? What we've seen today suggests it's not a simple yes or no. For someone nearing retirement and looking to secure a guaranteed income stream, especially with the 6.15% MYGA rates we're seeing from places like Wichita National Life, they can offer real peace of mind and act as a valuable bond alternative in a diversified portfolio. But for others, especially those with a longer time horizon or higher risk tolerance, the liquidity constraints and potential for higher fees, as Marcus Schaefer and Pat Collins pointed out, can make them less appealing. The lesson here is that understanding your own financial goals and risk tolerance is paramount before considering these complex products. Have you ever considered an annuity, or maybe even purchased one, and found it to be a game changer or a regrettable decision? Share your experiences and what you learned in the comments below. And if you want more deep dives into how specific financial products actually work, make sure to hit that subscribe button. If you're wondering how the 2022 rate hike cycle impacted different retirement income strategies, my breakdown of how Jerome Powell's Fed decisions changed fixed income investing is exactly the next thing to watch.